Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with silverdoctors.com, and this is your SD Weekly Metals and Markets Wrap. It is March 23rd, and our guest today is David Morgan, and co-hosting with me today is James Anderson and also Eric Dubin. Thank you so much for joining us, everybody.
Thank you.
All right. Now, David, the first question I was going to ask you about was the Fed rate hike, because we saw the Fed raised interest rates again by 0.25%, and gold took off. It's back approaching the 1350 level. What is your take?
Well, gold is the most negatively correlated asset to the stock market, and as we know, stock market took a pretty big hit after the raise of interest rates. And I think I'd like to point out confirmation on that. Both the Dow and the S&P 500 broke their trendline support. The NASDAQ 100 fell below their 50-day moving average. And the internet and social media stocks continue to lead the technology sector lower. I'd like to pause there just for a moment, because talking to people like John Embry and many others, that a lot of the mainstream stockbrokers were the FANG people, F-A-N-G, Facebook, Amazon, Netflix, and Google, and you just couldn't go wrong buying the FANG. Well, all markets go up and down, including these social media stocks that really don't, perform a societal function that I'm all that favorable to, but that's just me. On top of that, the Tencent holdings reflected heavy selling in the Chinese stock market. And further, my favorite market, the debt markets, the drop in bond yields hurts the financials, but it boosts the utilities, because utilities are something that people are going to keep using, and so the yields on those are usually pretty assured. So I'll stop there, other than perhaps the VIX is starting to indicate that there is some volatility in this market. So those are all confirming indicators that are facts that I think people should put into their thought as far as where are we in this market, have we turned? And my synopsis is absolutely the stock market has peaked, and the gold market is starting the next leg up. It won't be every day, but I think the major turn has taken place.
Just one point about that. I was looking in 2015 in August, if you recall, David, there was a 3% yuan devaluation versus the dollar in a matter of a few weeks. S&P went down about 11%. And, with this trade war kind of heating up, or supposed trade war that we have going on, I mean, the potentiality of there being a yuan devaluation is certainly there. So it's just something to throw in there to consider, I suppose.
And I'd like to add on to that, and great point, James, and that is that, crude oil is nearing another 3-year high right now. And most people don't know this, and I'll have to shout out to Steve St. Angelo for this, because as much as I'm in the markets, I'm always learning more, and I didn't realize how correlated silver is to the oil market. So anyway, we got a 3-year high in the oil market, and of course, energy prices share prices are starting to reflect that. And I might add what Eric pointed out pre-show, and that is, of course, that the miners are looking like they finally come to life and starting to support this gold move up. The only bit of a concern I have is that gold is very strong, and I expect gold to lead this time, and it is. Silver's somewhat confirming. I like to see a little more strength in the silver market, especially when I'm looking at the commitment of traders reports. But regardless of that, I think the major trend is what we have to pay the most attention to, and I've already stated that.
So the trade war is something that's brewing, and it's probably going to be the catalyst that changes a lot of the domestic politics and the way people are looking at markets and unsettling any advantages that were brought to psychology late last year with, the progression of Trump's efforts to reform taxes and do infrastructure spending. Those were the fundamental underpinnings that brought people optimism about the U.S. economy and the stock market going forward in 2018. And we've seen some pretty big corrections this week and unsettling moves in the markets. What's your take, Dave, when it comes to the prospects of a possible trade war with China?
Well, it's something I'm going to take on in the next issue of the Morgan Report. I'm going to go into, more detail based on, Austrian economics and what's always happened in the past. I think, empirical data, having real facts in front of us is the best way to analyze this going forward. The only caveat I really have at this point in time, subject to change or learning more, is this something that Trump is thinking out ahead of time, knowing that these things never work? And I can't answer that. But I do think it requires that someone that's watched what's going on in this administration and not being able to outguess him every time requires that I think this in a couple of ways, which means obviously these type of things don't work out well in the long run. But secondly, is this something that's planned and he's got a counter move to it? The answer to that is I don't know, but I am going to address my thinking about that in the next issue.
One quick question there. It kind of seems, if you look at both of the financial systems for China and the United States, and especially with the United States, with the unfunded liabilities that we have. I think Dr. Kotlikoff estimates it around $210 trillion in net present value. And then you have China, who's exploded their M2 over the last decade at a rate that's never been seen before in history. I mean, isn't it in both nations' interest to essentially devalue their currencies in the next 10 to 20 years?
I think so.
It appears to me almost like a phony trade war. Like, what? You can just have a tit for tat devaluation going on for a few years, and that would be helpful to both nations.
Yeah, I don't rule that out. Good thinking. I'm still processing it, and people that have read me for years, especially our paid members, know that I'm not afraid to, one, say I'm wrong, and two, bring them along as events unfold. But I think the main thing to prepare for is, again, what we talked off air about, and Eric is the one that brought it to the fore, and that is, who's got the best gold backing for their currency? I think that's really something that most people don't think about unless they are on shows like this. But this is critical because there's been a currency reset. It's always been based on backing coming back to the gold market. So maybe, Eric, you can bring that up and we can discuss a bit about that.
Sure, yeah. Russia has the greatest backing gold ounce against the ruble and their debt position. They don't even have that much sovereign debt. So, if there ever was a reset, Russia would be in a pretty good position, and China as well has way more gold than what they're declaring. In fact, they haven't even been doing monthly declarations, even though they're continuing to accumulate. I mean, they even produce about 450 metric tons of gold domestically, and all that gold goes right into the government. So, all this time, they haven't been declaring what we know are their imports and domestic production and so forth. So, both China, Russia, consortium of BRIC countries to a greater or lesser extent, and they're all positioning against a possible reset in the future, and that's probably going to happen. And China, to talk to your point, Dave, James, about how China probably will devalue, their own dissenting commentary among their academic community and policymaker community openly do talk about how it would be in China's best interest to devalue 20% across the board. But if they did do something like that, it would upset their attempts to try to internationalize their financial markets, and they've been on a plan trying to do that for the last 10 years. So that's part of the countervailing reason why they don't do that, combined with just how that would upset the financial markets, even in the United States, and create a cycle of trade war retaliations, possibly. So now that we have the Section 301 tariffs that are in place, the Section 232 tariff rounds, and then this latest round that the Trump administration is speaking of, China hasn't really retaliated all that much. They've only done $3 billion worth of tariff responses. They're going to do something huge, and it probably won't be targeting currencies or anything like that, but eventually, if we get into a trade war and there's lots of tit-for-tat tariff exchanges, then it's quite possible that China might reduce their purchases of U.S. treasuries, and they might do things in the currency market as well, too, because if they're changing their foreign capital account and how they deal with managing their own financial markets in relation to the FX markets and their position of treasuries, it can get really ugly. So trade wars tend to just kind of escalate by default just because of small tit-for-tat moves and end up spiraling. And that's where we are. The geopolitical backdrop to this, too, it's not a matter of Democrat versus Republican perspectives. It's a matter of empires going at each other. And the United States is in a slow decline, and China's in a ascendancy. And in a 20-year window, when we look at a bigger picture, the geopolitical aspects underpinning all of this are also pushing China and the United States towards each other in a headlong rush. I mean, in the Obama administration, he launched what was called the pivot to Asia. And this isn't about, Trump alone. This is a bigger picture cycle between empires. And the United States is in a financial position that requires it to get more aggressive when it comes to these kind of tariff and trade wars. It's really bad policy. We have had bad policy for decades, and it's just getting worse.
Now, regarding the bad policy that you speak of, Eric, if we could have David comment on this, do you think it's going to get worse from here?
Oh, yeah. This is just the beginning, as Eric, stated. I mean, it's going to be, a bit of a battle. I mean, unless, there's something out there that I can't see, and that's very possible. I mean, Trump did, go to China and met with Xi Jinping and spoke with him privately. So, maybe he gave him a wink and a nod and said, we're going to do this trade war, but here's what's really going on behind the scenes. I couldn't rule that out entirely. But normally, if you look at, the position that China has, and I'm just piggyback, what Eric said, they still own a lot of treasuries. So, who do you want to get in a fight with? You want to get in a fight with somebody that basically owns you in the debt markets? No, you don't. So I don't think it's going to be good. I think it's going to be part of what takes us down to what I consider to be a reset, or however this unravels. But it's all the evidence is showing that we have problems not only in the debt markets, but in the equity markets. Gold is starting to resurface. And I think this whole perspective is going to shift from what we've seen for the last several years of up and away with this increase of money supply through the banking system into a position of where you got to be able to touch what you own and be more conservative. So this is something that is just beginning to be seen by the markets. The smart money already knows it, but the general public will be left holding the bag. And I don't see any real momentum in the precious metals until we get what everybody loves, and that's, the high-priced silver and high-priced gold, which I see is probably going to be into 2019.
Now, moving back to the precious metal markets, did you want to expand on how the rise we saw this week in precious metals impacted the mining sector?
Well, there's always a leverage in the mining sector, which is roughly 3 to 1. So if you get a 10% move in gold, you're going to get about a 30% move in a top-tier mining company. And the metal stocks have been just beat up so badly that there's just really no reason they could go lower. But, they seem to just stay there for a while, even with a firming market. But this week, we've started to see them pick up. So I think they are confirming. I like to see silver outperform gold on the way up. And percentage-wise, it hasn't. Gold was up 2.2% for the week. Silver was up 1.6% for the week, but oil was up 4% for the week. And, of course, stocks are down sharply, as already mentioned. So this jittery market is starting to shift asset classes, and it's only good for the precious metals.
Just one question out there, David. I saw a video done by Jason Burrock at Wall Street from Main Street about Hecla Mining. He had mentioned that Hecla Mining had made a pretty strong acquisition, and for a long time, I guess they had been a primary silver miner, and now they're moving into gold mining and diversifying out of silver mining. I mean, I'm sure you probably saw that news. I wonder what your thoughts are.
Well, a little bit different. I mean, I know Jason quite well. I mean, Hecla has always been kind of a gold-silver company. It depends on what the prices of the two metals are. You can make it as a gold company at times. And, of course, I know, their CEO quite well. In fact, when he took over for Art Brown, I was there when Phillips came in to Hecla Mining, and he's a great guy and a good manager. And I'm pretty favorable to Hecla. But I agree that when I spoke with Phil Baker about this, I mean, basically, yeah, they're looking to be more than just a silver company. So there's some truth in that. I'm not trying to argue with anybody, but what I am saying factually is that they've kind of always been on the edge. They've always had a pretty good gold input to their bottom line. If you go back into 1979, Heckler was the best performing stock on the entire New York Stock Exchange. It went from $5 to $50. And it was on the front page of every financial publication that existed in January of 1980. And what I found remarkable is we recommended Heckler on the Morgan Report at 50 cents and sold it at $5. So we got the same 10-bagger that had happened in 1979 for readers, and no one was even aware of the silver market at the time.
What years was that, David?
Oh, I have to go back. I was speaking in Calgary, which is, of course, an oil place. So I don't want to misinform anybody. Probably 12 or 13 years ago. It's quite some time, but Heckler's still below 5. I mean, you know, I do sell these stocks. It's not like I'm married to them. You know, I date them for a while. And if I think they're overvalued, I'm not afraid to take a profit.
I was just about to ask David to expound a bit more in the direction of what he thinks is happening with silver mining companies and their longer-term viability at, you know, sub-$17 silver, and whether or not the industry can survive and how that's going to force upward move in prices over time. Because that's something that a lot of, you know, speculators, investors, and hedgers and so forth that go into silver don't really appreciate when they, you know, take on positions thinking that the manipulators are going to perpetually be able to control the market. So I don't know if you want to talk to that, David, and then wrap up, but...
Sure. Well, the way I see it, maybe I misunderstood the question. I think you're going to see more consolidation. I mean, you're going to see the first Majestics that have, you know, rotating credit line, and they'll be buying up or optioning these really good properties, and there aren't that many of them. So I think you're going to boil down. You're going to have like 5 major silver producers out there. Most of them, or 2 or 3 of them, are really conglomerates like RTZ or BHP that, bottom line, they produce a lot of silver, but it's meaningless to their overall productive capacity because they're base metal miners. So I think that's a trend. There will be a few always of these little smart, you know, micro cap stocks that make a big discovery or something. But I think you're going to see more consolidation if prices stay at this level, because unless you've got a credit facility or cash availability, it's going to just starve out these smaller, even the mid tiers. And that's unfortunate, but that's the trend.
Yeah.
Yeah, David, I was reading from your book, the Silver Manifesto, earlier before the interview, and I was looking at Peak Silver and what your comments were there, and I just wanted to get an update, maybe what your thoughts are on that topic. I know it's kind of a large one, but any thoughts on what's going on the Peak Silver front?
Yeah, I'm still of the same opinion, and it's still even more studied than when I wrote the book, which means that there's still a couple of really large silver deposits that are yet to be developed. In fact, the only silver speculation that I own on the exploration side had the last drill result of over 50 ounces, not 50 grams, 50 ounces the ton silver, like 2% lead, 3% copper, and 1.5% zinc. I mean, it's incredible. It was like $1,400 a ton, and a lot of these gold companies are starting with 1 gram or 1.5 grams. I mean, they're looking at $40 or $50 or $60 a ton. I don't know. It's the same commodity. Would you rather buy a company that has, you know, $1,400 a ton or one that has $60 a ton? I mean, it's pretty easy for me to evaluate, but it is a speculation. But nonetheless, I bought some more on the announcements.
Where is that located, that mine? Is it something?
I'll give a big hint. It's in Mexico.
To Mexico? Okay. Well, I mean, that's it. That's all I wanted. Just a general question, because I assumed
well, just to go a little further, because I am excited about it, it looks like it's a district-sized play. I mean, if this thing is as big as it could be, not would be, could be, it would add phenomenally to the amount of silver that would come above ground over the next, say, 10 years. So I'm convinced that peak gold has probably happened, but peak silver has not.
Okay.
All right. Well, David Morgan, thank you so much for joining us here today for our SD Weekly Metals and Markets Wrap. Did you want to share with the viewers any last thoughts you had and where our viewers can find you online?
Sure. The best thing to do is just go to themorganreport.com, all one word, The Morgan Report, and get on our free email list. That's the best way. We will, of course, update you on occasional offers from the Morgan Report, but overall, I provide a weekly update for everybody that's an overview of the markets and specifically on the precious metals.
All right. Once again, David Morgan, James Anderson, and Eric Dubin, thank you so much for joining us here today for our ST Weekly Metals and Markets Wrap.